Happy Monday, traders. It is 8:02 a.m. Chicago time on Monday, the 8th of November, 2021. As you may have realized, we have switched the time here in North America. We are now in line with Europe, back to the old differential. This is episode number 2111. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's dive right in, jump right in. Keep saying the same thing every morning, may be boring. The Convergent Trading pre-market summary sheet. Today, the overall market posture is neutral. Thank you, Vernon. The market posture is neutral, although since this sheet was created at 8:50 Eastern, the ES has, or the Russell ES and others have had a higher push up, pushing it into the mixed zone rather than neutral. Overall, we are seeing some a pretty solid test of the 4,700 here on the high in the S&P, up 19 basis points. We're still trading in Friday's range for most markets. Let me check that for the Russell. Yeah, it is still, yeah. So that's where we stand. Crude taking a pop higher, a slight pop higher today. Versus where it was on Friday, where it closed quite bearish on Friday. It's pulling right back into the $82 handle. We're seeing crypto pushing higher. Bitcoin futures tackling their October high. Ether futures having blown through all highs. Still quite strong. An important point to make, 82% of U.S. S&P 500 stocks topped earnings forecasts in Q3. An outstanding performance by the stock market this earnings season, which is basically coming to an end in terms of the majors. We have a couple of key earnings this week, but that's about it. The session overall has been pretty quiet. It's been pretty sideways until the Europeans came in and pushed our markets higher, not in the NASDAQ. The NASDAQ's being dragged down by Tesla. I'll show you this. This is the posture of the S&P 500 stocks, and you can see Tesla here is pretty red. It was down as much as, I think, 6% or something like that as a result of it. I'm sure you've heard. I don't like repeating the hot news or whatever. Elon Musk got on Twitter and asked Twitter followers if he should sell 10% of his stake in Tesla, which amounts to about $21 billion. And 58% of the voters said yes, 3 million votes plus. So that stock is falling, pulling back a little bit. But in the pre-market, this is a pre-market change, as you can see here. In the pre-market, pretty steady, pretty sideways across the board. So that's what we're coming into today. For the S&P, we have a multi-distribution profile. Until just now, we've had a double distribution profile, 151,000 contracts traded. The inventory is pretty much flat. It is equally, the volume price is equally distributed above, pretty much equally distributed above and below the prior settle. 24 points of range, which is above the common range, or the point, the mode, or the point of control for the last 252 days. Statistically, it's expected at 23. It's at 24. So that's a good thing to come into on a Monday. The high 4,700 and a quarter just now. It was just made a second ago, with a pretty good push for this high. Once we broke through the 46.95, we had a pretty good squeeze higher on pretty good delta. I'll show you that on a chart. In terms of what's on deck for today, don't forget Fed's Chair Powell at 10:30 Eastern Fed's Clarita and other Fed officials have been speaking, but Fed's chair Powell's at 10:30. That might be a market mover. Lots and lots of central bankers, as you see here, just tons of central bank stuff. Current account out of Japan at 6:50 p.m. Eastern. Great Britain BRC retail sales at 7:01, and that's all she wrote. This is from Friday. The Friday expectation was we're likely to push into '03 from where we are. I expected a spree into and above 4,700, and I expected the market to be responsive back to the 4690 region or so, 4685. That was the expectation for Friday. The secondary expectations, if we dip lower first, then we are expecting to push through into somewhere in between the 03 and 20. We got a bit of a combination on Friday. Here's what we have for the action on Friday. Pretty good rotations, a decent opportunity. We did have a gap up. The gap did not close in the first hour, so the expectation is it would continue higher until it started to turn over. So the opportunities on Friday really against market generated levels as we come into new all-time highs. Let me ask you something. How many of you are finding this really hard to trade? Maybe you find trading hard anyway. Unfortunately, if you're on Twitter, you can tweet at me if you like. But if you're watching this on Twitter media, but if you're here on YouTube, let me know what you think of the current action. Do you find these new all-time highs difficult to trade, or is it really in your wheelhouse and you like to have a market pushing new all-time highs? I find that for me personally, this is not an ideal trade. I prefer a trade that is two-way, that is not choppy, but a trade that is testing clear areas like we had in October, testing clear areas, then failing, retesting other areas. And it's not a choppy auction, but a two-way auction that's going up and down and doing a proper basing. Whereas this auction here, although Friday we did pull back right into the prior high at 74.75 and almost tagged the prior close at 74 and a quarter, 74 even was the prior close. It still feels like just money's being allocated by the higher time frame, and it seems unidirectional. As you saw on Thursday, big move, then sideways, big move, then sideways. That's been kind of the issue. Still, we have to trade what we see, not what we want it to do or what we imagine. For example, this push into the range here had a pretty strong counter rotation. We did not have a counter rotation that big in a while. Then it puts a higher low in, and this sets up a push back to full session mid with an extension to RTH mid, and that was a pretty decent trade right there. But other than that, it's just be patient. Be patient. The market cycles through different regimes, and different people make more money in different regimes. And so you're not, if you're scalping and you're a great scalper, sure, you can make money in all kinds of markets. I did that for years. But if you're trading on structure and you're not competing with the high frequency machines and so on, which most of us are kind of approaching the market that way, it's the times when it's not your regime, it's time to pull off the gas, just coast, survive, be selective, take the trades that make sense to you, Stick to your plan. This is where your risk control is tested. This is where your discipline is tested, because we feel as human beings that if we're in front of our computer and we're going to be here all day, we have to do something. We have to trade. We have to make money. And that's not the case. Trying to make money on a daily basis is likely to cost you money. You're simply going to donate to the market. So if this is not your trade, either slow down and be clear about when you engage with the market so that you're not veering away from your plan, or look for some other product to trade that is more to your liking. Move to, my go-to is crude, for example. Volatility has been increasing according to our statistical rotation studies every week. You might move to the Russell if this is choppy for you. The Russell is a little more directional, that sort of thing. I'm not telling you to change your trading plan, but the beauty about futures is you can apply the same thing with minor adjustments across a whole universe of products, because they're all centrally traded, and they all trade relatively the same, while adjusting for volatility, rotations, and statistical habits. So this is why I like futures. It's one of the many reasons I like futures. Again, they're not suitable for all traders, but I don't have to learn how Tesla moves, and then learn how Amazon moves, and then learn how to trade some other thing, Roblox or whatever. I don't have to relearn stuff and discover. I can just take the same thing, make adjustments, and apply it across the board. You're not going to get the same fills in the NASDAQ as you would in the S&P. The NASDAQ will run through levels a lot. Things like that, you have to account for that. Much bigger rotations. Anyway, I'll stop talking about that and focus on what's in front of us. But I know it's discouraging to come in here day after day and maybe not get a setup, or to feel like you're getting run over. When you get long, the market sells off. When you get short, the market rallies. Just make sure you're focusing on your plan rather than the fact that you need to make money because everybody's just buying and making money, right? That's just noise. So this is what happened on Friday. We had a multi-distribution profile. Friday played out scenario one, but it pushed through the upper range. We're expecting 03. It pushed to 1175, and it pushed the lower end of the range. We were expecting 85 and a gap to remain open, and it pushed and closed the gap down into 74 and a quarter. So my range expectations were smaller than what the market yielded, which is always a good thing. Because I don't want my range expectations to be much wider than what the market can yield, because then I'm probably losing money. And so looking at Friday, we did have a market that is weak, seemed weaker, and has turned over. So scenario one was in play since, and by the way, Friday, look at this delta. It's just weak. From the beginning of the session, it was weak. Let's look at the overnight session here. The overnight session opens in a gap down and comes right back into prior settlement, which is 46.90 and a quarter, and then pulls back a little bit in the Asian session before Europe comes in right in here and takes it back up. We are grinding up. However, this grind up is occurring on pretty decent volume. If you look at what we have here, this is Edge Pro X. This is my execution platform. If you look at what's going on here, you'll see that we have really strong delta coming in here. You see the large, very large, and small moving in the same direction with a lot of activity on this bar that broke us out of the 95 top. So this was a classic kind of breakout trap from the overnight point of control right there. So a lot of volume. This is what imbalance looks like. the traders come in and they lift strong with some pretty good delta. We ended up pushing to 700 and a quarter when this video started, and now 702.25. We're making our way to the upper distribution from the prior session. So if we look at what we have from the prior session, we had a profile with balance down here, a high volume node up here, and we are approaching the upper high volume node, low volume node that separates the lower part of Friday's profile from the top. This is why there's a stock zone here. It's 4702.50, and we've stopped at 4702.25. If it gets, you can see it's turning red here. The delta is turning red in these prints. If it turns over, then the base is likely to be around 95, and that's the trade I'm looking for this morning. I'm looking for this thing. If it does roll over, I want to see what it does at 95 for a continuation into the upper distribution from Friday. If not, if the upper distribution does not hold, then we're taking out this all-time high at 47.1175 and continuing higher. We had a kind of a poor high. The Friday high was not an excess at all. You could see it there on the profile. It did not show an excess whatsoever. So looking at the overview, while we're here, looking at the overview, the ES is keeping pretty good separation from its VWAP. In fact, all of the indices are, the NASDAQ being the weakest or weak-ish. The Russell making a run for it today. Russell very strong coming in. Gold is finally breaking out through the upside, breaking away from the consolidation it's had for the last couple of weeks. Same with silver, the 10s, the bonds, same thing. It's been pretty interesting. Crude is getting tangled up in its VWAP again. I'm seeing this as a retracement in crude rather than a break in crude. There was a decent base here before it broke higher, but it's really fighting this trend line. Same thing in nat gas. This looks like a reversion rather than a push higher. Nat gas is expected to break lower. I expect nat gas to be back at the $5 mark right down here. Okay. Let's take a look at what's expected for today so you guys can run off and do your thing. By the way, for the week, on Mondays, I like to go over what we're expecting for the week. Tomorrow, we're getting balanced trade out of Germany. These are the top tier releases. Top tier releases for the week. Balanced trade out of Germany tomorrow. The ZOO Economic Survey. Sentiment Index, which is really important, also out of Germany. PPI month on month tomorrow morning, as well as the Westpac Consumer Confidence out of Australia. Inflation rate out of China, very important. Wednesday, the inflation rate out of the U.S., core inflation out of the U.S., unemployment rate out of Australia. Thursday, we have balanced trade out of Great Britain, GDP out of Great Britain, and the ECB macro projections for the Eurozone. And on Friday, we have Michigan sentiment prelim and the JOLTS job openings. So every day this week, there's a key release. Just be mindful of that. Make sure you know what's on the calendar. Let's take a look at what's expected here for today. Primary scenario is expected to run into a balance, a reversion on the open, pull back to the 95, consolidate here for the overnight point of control stat, and then I'm expecting it to really go and test this upper distribution, this high volume node right up here. Expecting a test of that. This is value area high up here that's shown, a full session value area high. and then expecting new all-time highs to 47.20. We've paused at the 20 quite a bit, expecting it to pull into the 47.20 and push back. So we're looking for about 25 points of range, 25, 30 points of range to the upside from low to high. That's what this market looks like. Yeah, I'm not a fan of all-time high trading either. The secondary is an open auction that squeezes higher, checks this 11, breaks through, and then we get an impulse in the afternoon or later in the session, and an impulse downwards towards the overnight point of control, and then we revisit the settlement right in here, the settlement, consolidate below. So we end up with a higher high, higher low, new all-time high again, but another weak close just like we saw here, just like we saw here. It's starting to round off. It's starting to get weaker as we push higher based on what I'm seeing. This market's been on a sprint, folks. So generally a sprint requires, just like with a human being, you sprint uphill, you're going to need a break. And traditionally, this is what happens. This run has been very, very strong, though, for the month of November so far, for the last 2 weeks, really. Good luck, and I'll talk to you soon. Take care.